I'm Scott Schultz, otherwise known as the Cow Guy. Thank you very much for joining us here today. Why don't we go over a few of these closes just to give everybody a good jumping off spot, and we'll get to our guest analyst. A lot of green on the screen here today. Decent bounce back in some of the stuff that sold off hard yesterday, but we'll start. We're going to start with corn up 11.5, beans 433.5 in D's corn. 1048 even was the settlement in Nove beans, 20 3/4 cents better there. We had wheat in Chicago up 15, hard red in Kansas City up 11, and 12 1/4 cent rally in the spring wheat in Minneapolis. So all good there, right? Crude oil up $1.96, gold up $12.60 as we speak with 33.62. Live cattle bouncing back from yesterday's sell-off, $1.70 better in the August to 212.45, and feeders also higher by $3 to 309.02. Cotton up 60 points to 68.63. If you care about the equity indices, the Dow is down 36, the S&P is up 20. The dollar, just a little weaker, but still around that 96.5 level at 96.43. And I guess I should probably put the 10-year yield up there. You're probably interested in that. It's at 429 right now. Yep, 429.5. All right, so that's it. Let's bring him in, our next guest analyst. It's Mr. Brian, Mr. Brian Hoops from. He's the president of Midwest Market Solutions. Brian, I haven't talked to you in so long, I didn't even know what to say was your handle anymore. You're a big shot, and I almost forgot.
I thought you forgot about me. Yeah, it had been a while since we talked, Scott.
It has. So how are you, and what's going on? What's top of mind? What have I been missing all this time?
Well, you've been missing? Well, up until today, really not much as far as the grain markets go. It's been pretty much a livestock-driven second quarter. The grain market really quiet. And you would have thought that we'd have this type of range from high to low in corn and beans on Mondays. Quarterly stocks and planning intentions report, not on a day where there was no really reports out there. But there is some very positive things underlying here. And the funds are fairly short in wheat and very short in corn. And so there's reason to buy those markets back. And we've seen some active short covering yesterday in the wheat, today in the wheat and the corn, and just some real strong buying in the soy complex. So, I think there's some upside here. There's some positivity. We've had a lot of doom and gloom here recently, but you got to hand it to President Trump. He's got a lot of victories coming across his plate right now. Big one with Vietnam and their trade agreement, $2.9 billion worth of ag products package signed. There's all kinds of rumors out there that tomorrow when he goes to Des Moines, I guess it's actually the 4th, and speaks in Des Moines at the fairgrounds, that he is going to announce another trade package. This time it might be China with a trade package, but certainly it's going to be interesting a weekend, to say the least, relaxing for a lot of people, but I think you have to keep a couple eyes on what's happening with trade agreements and with President Trump as well.
You know, we've all heard about the funds and their short position, and I guess the million-dollar question is always, all right, we'll probably get a squeeze at some point in time. Does it start at 450 or 350, right?
Right,
so
right.
Everybody's waiting, but maybe, just maybe, a few of these things have caught fire today, and that would probably, at least if you're short, make you a little bit uncomfortable over the weekend?
I think, yeah, absolutely. You know, you had some news, as far as negative news, good growing conditions, a big jump in improvement in ratings on Monday afternoon. We know we're going to have 95-point-some million acres of corn. We look out to the forecast for the next 2 weeks, everything looks perfect, so we're pushing contract lows, and then all of a sudden we get possibility of trade agreements. We have a Senate passing a package to the House that looks like it'll pass in the House, and that certainly appears that we're going to see more usage of biodiesels and expansion of the biodiesel program that's going to lift bean oil futures and probably soybeans to an extent. And all of a sudden you go from trading this weather to start trading some of the other news that's out there, and we start to see prices actually can rally, and the funds can buy positions back. They don't always have to sell. So, yeah, maybe things aren't as bleak as what they were on Monday after the crop ratings came out and after the disappointment and the reaction to the stocks and acreage report. We're looking at some other news features that maybe if we get some dry weather into the end of July, like some forecasters are talking about, things could get very exciting and kind of salvage some of this marketing that has not been done by the American farmer so far.
I mean, it'd be interesting to see a good rally that really wasn't weather related, right? I mean, finally get some demand or some decent news, right? Because That would be interesting around this time of year when normally we're going to be pollinating between the 5th and the 15th of July this month. It would be interesting to get a rally that had nothing to do with weather or pollination.
Right. Yeah, we're been pollinating here in Missouri for 2 weeks now, and probably by the 20th or so of July, over half the crop, 50-60% of the central Midwest should be pollinated. Weather looks really good. So this rally that we're seeing today is not weather related. It's more news related, demand related, all positive long-term things. And maybe we'll get even a mix of weather thrown into it, depending upon how these weather models handle some of the heat that's been forecast for late July. Now, if they have a hard time forecasting what the 4th of July is going to be in a couple of days, let alone to the end of the month, but at least the weather models for the next 2 weeks look fairly wet and warm and maybe dry after that.
All you got to do to make it rain is just plan an outdoor event, right?
Right, exactly. And I'm sure there'll be a lot of those events on the 4th of July, and especially over the weekend.
Yeah, sure. Okay. All right. Stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Brian Hoops, President, Midwest Market Solutions, right after this. All right, welcome back. I'm Scott Schulte, otherwise known as the Cow Guy. This is Commodity Wrap. Thanks for joining us here today. A lot of green on the screen out there to makes the producers happy. Another person that makes happy is our guest analyst who's been sticking around. I know he's busy, but he's got more to say. Brian Hoops, he's president of Midwest Market Solutions. He's in Missouri. Brian, thanks for sticking around. I was going to ask you before we went away to break, but what's the weather been like for you? How do things look like, just anecdotally around your area?
So in our area, we had the wettest April, May on record, which a lot of the wheat, it was great for corn that got planted, came out of the ground quickly. A lot of the soybeans that were planted, very good. For the wheat crop, it wasn't quite so good because that wheat, absorbed the moisture at first, but then as it got into May and wanted to get ready for maturity, it was too much rain, just too much, and the crop didn't handle it. Well, June ended up being a fairly wet month as well, but not near as wet as what it was. So the corn absorbed a lot of the heat, a lot of the dryness and sunshine. Things went from kind of a yellow color to bright green and really took off and rallied. And as I said, we've been tasseling for 2 weeks in this area. So a lot of the soybeans won't get planted right away until after the wheat has been harvested, and that's been going on for a week to 2 weeks. And you can see the combines right behind the wheat harvesters. When the combines are done, then the planters start rolling after that. So there is a lot of that crop being put into the ground yet. So things have improved a lot as far as the weather goes from earlier this spring when it was extremely wet.
Are you going to reward this rally or let it play itself out? What do you think with your producers?
Well, I think at this point in time, I don't think there's any interest in the producers selling at these price levels. A lot of producers I talked with on the corn, specifically like December corn, they just don't have any interest in selling 425 to 430 December futures. Now, if we get to 460, 65, 70 futures, there'll be that interest again because I think they have a little bit more confidence now that their crop is close to pollinating, what size of a crop they're going to have, and they'll feel comfortable selling, especially if they don't have storage or have an overrun. They're going to do a lot of selling on any rallies here. So I do think you get into the 60s and 70s, you'll find a lot of selling pressure. Soybeans may have more upside, and really hard to say, depending upon if there's a Chinese trade agreement and what it says.
Right.
We may go from 10, 13, 10, 14 beans that we were yesterday or late in the evening to now 1048. We may go up in the 1075, 1080 range pretty quickly, maybe even $11. And then that has to start being more attractive again. So I know wheat producers are struggling right now with the cost of their wheat. A lot of $5 cash bids out there in the country. A lot of producers are even sweeping their bins and selling crop and then putting the new crop in the bin as a replacement. They just don't want to sell at these price levels unless they absolutely are forced to.
I'd be remiss by letting you go without talking about cattle. What are your thoughts there?
Yeah, it was another market that started lower and ended higher today. A good recovery in the cattle. We're getting we're close to being past the 4th of July. Once we do, then your demand usually starts to wane a little bit. Get past the grilling season, the Father's Day, 4th of July. A lot of times that meat demand does start to fade, and grilling season fades a little bit. That's a concern, and I think you always have to have that concern for this cattle market. Supplies are going to be tight. we know they're going to be tight, but I do think that August's contract is just too much discounts. October trading 209 to 212, with the cash trading 220 range this week, and probably going to be higher next week. I think those futures contracts have to come up a little bit before there's real aggressive selling against those contracts.
I mean, it behaved well after the news of reopening some of the Mexico-U.S. ports for cattle with the new world screwworm issue. It sure did bounce back today, didn't it?
It sure did. Yeah, great rally. Midday boxes were higher, and I think some of these trade packages that we're getting will include U.S. beef as well. So we're getting some export demand. We don't have to rely on just on the U.S. consumer demand going forward.
Anything else I'm missing? Because, there are some folks that are worried about the downside in hogs. What do you think about that?
Yeah, that's a market that really has surprised me, is that August and July hogs trading up into the 111, 112, 113 range. I didn't see that coming this summer, especially with China being out of the market largely. But they've actually been buying. I thought with the tariffs they would slow down their purchases, but they've continued to be buyers of U.S. pork products. So that's a market that has been surprising, and there is a market that's probably very vulnerable to a sell-off. It's probably those deferred contracts in August, maybe even October. December seems a little cheap yet, given where it's at. It's already discounted heavily to the summer futures contracts, and maybe hard to find that market really finding any real selling pressure.
I got to come back on the afternoons more often because there sure is a lot of green on the screen here today. It makes this job a little bit more exciting.
It's more fun, isn't it, to talk about the green stuff instead of the red?
No kidding. Well, it's always good to talk to you too, Brian. Thank you very much for taking the time. I know you're busy, Brian Oops, President of Midwest Market Solutions.